It has been a good day for across asset classes, whether it's equities, commodities and currencies as well. For the metal prices, essentially, what is your sense? I mean, we have seen the prices come off their March and April lows. Almost every metal is up by 20 to 40% from 2020 lows. But at these current levels, how is the scenario looking to you?
Well, good afternoon, Manisha. How's it looking? I think it's, you'd have to say, very, very bullish recovery, and that's been demonstrated also with Chinese equities over the last few days. US dollar sell-off, and have a look what silver's done. Gold's little brother has done probably as good as any of them, up the best part of 55, 60%. So, you know, and you've got that upward momentum pushing gold ever higher at, you know, that 1820 to 1825 sort of number. So, yeah, plenty of wind behind their sails, and looks like it's going to be a very good quarter for the base metals and certainly for precious, Manisha.
Oh, well, absolutely. We've started on a very, very positive note and very exciting for precious metals especially. But I'll keep it to two parts. And Peter, first about the base metal prices. You know, copper is up 42% from March lows when we saw 45-month lows come in for that one. So within the lockdown period itself, we've seen the recovery come in. It's showing in the prices. From here, what is the risk reward that you see in the metal prices?
Well, as far as the risk, I think, you know, do we see a derailment and COVID really ratchets up tremendously and you see a second wave hit China and all of a sudden you've got mass lockdowns across not only the Americas but certainly Asia and your good country, India, and then that's the risk. And then Europe. And do we enter that space again, or the reward side, do things sail on the way they are? It's a slow uptake or slower than expected. We develop a cure for the virus, and everything seems to sail well into the sunset with a huge stimulus rally pushed on by every central bank in the world. And we say goodbye to everything by 2021. So that's the issue as far as risk versus reward. And it's hard to put your mind whereabouts you live in the world and what your mindset is, because there's a lot of countries that are hemorrhaging now and realise that the only point in time was government stimulus. And every central banker is prepared to throw whatever's needed to try and keep the wheels oiled.
So would you rather be in precious metals than industrial base metals, is what you're saying?
I think so, Manisha. And I think the reason is twofold. First off, the risk is already priced into the market and people are mindful. They've seen a huge rally to the upside as far as equities. They're conscious as far as that US dollar and interest rates. And the trade now is very much centred on that momentum push on gold. And I feel as though that you're looking at, it had a very, very strong move to the upside. Well, we understand where it was trading in March, but just over the last matter of weeks, it's moved very, very high to that 1820, 1825 number. And the momentum behind it, if that US dollar comes off a little bit further, I think it's got the chance to be an 1840 trade sometime next week. Why not? You know, just that momentum pushing it higher. So I think the place to be from a trading perspective is very much across precious and gold and silver are the standouts.
Peter, tell me more about silver, because it's having the best of both worlds. You know, it has support from the precious metal safe haven buying in case of gold, and then 2/3 of silver is used in industrial applications. So with the base metals running up, silver seems to be getting some support from there too. But even then, it has underperformed gold. From here, where would you rather be if you had to choose between the precious metals itself?
Well, I think the focus on everyone's mindset has been gold, and you know, but the reality of the matter is its little brother has performed extraordinarily, and I feel as though that there might be more of a catch-up in the short run as far as silver. You might see that ratio narrow a little bit further and that's for our viewers' standpoint, is that gold to silver ratio. Go and jump on some technology and go and appreciate that ratio number, because over historical time events, it's always at a certain ratio over those long runs. So it's very important for traders to understand that. There's probably more upside, I think, in the short run for silver, but both of them are going to be standouts, I think, for the rest of 2020. And if the global economies don't derail, then that's going to be even a more solid push to the upside from an industrial demand, I think, for silver, Manisha.